the world economies going. The European Systemic Risk Board, Europe's risk watchdog, says threats to the financial system have increased considerably. At the region's sovereign debt crisis weakens economic growth and pressures banks. Key risks stem from potential further adverse feedback effects between sovereign risks, funding vulnerabilities within the European Union banking sector, and a weakening growth outlook both at global and EU levels. And they say that decisive and swift action is required from all authorities. Bad policy decisions could push the United States into a lost decade and put the Eurozone into recession, according to the IMF. Mohamed El-Aaron, who is the head of PIMCO, the huge bond fund manager in the United States, says the world is on the eve of the next financial crisis. And he is very, very concerned about what's happening in Europe. George Soros came out and said this week the United States is already in a double-dip recession. Nouriel Roubini said a recession at this point is unavoidable and could be worse than 2008. Then you add to it, in the United States, there could be another government shutdown. And we've talked about this, I guess it was about 3 weeks ago, something to watch out for. That's right. The House of Representatives voted down a temporary measure to fund the government into the next fiscal year in the United States, once again bringing the U.S. to the brink of a shutdown. The new fiscal year begins on October 1, and the U.S. Congress has yet to pass a budget. And Senate Majority Leader Harry Reid warned there is a chance that the U.S. government could shutter by the end of the month. They are fighting over different provisions within the budget bill, and they are not going to cave. So, as if it is not bad enough as it is, we could potentially have another government shutdown in the United States. We saw what happened last time. In the U.S., 6 in 10 do not expect the economy to improve soon. That was according to a new Gallup poll. Then on top of it, you have 40% of consumers slashing spending. Worried about the economy and the stock market caused 40% of consumers to cut back their spending over the past 2 months, according to a study on financial security from Bankrate.com. You're seeing jobs numbers very poor in the United States. You also have household net worth plunging. Mayor Bloomberg out of New York predicts rioting in the streets if the economy does not create more jobs. Lawrence Kotnikoff, we've talked about him before. He actually says the United States is in debt over $200 trillion when you take into account all their entitlements. He says America's debt woes are worse than Greece. Harold, you have people taking money out of mutual funds and fund outflows topped the Lehman crisis at $75 billion. Investors have pulled more money from U.S. equity funds since the end of April than in the 5 months after the collapse of Lehman Brothers. And they're talking about $75 billion has been pulled out of equity funds in the United States. And it is a crazy, crazy time. That's why we say, listen to our radio show on a weekly basis. If you miss a show, catch us on Harold's website, HESradio.com, HESradio.com. Get our free weekly newsletter. Connect with Worldwide. They'll help you start your own precious metals investment account. Invest in precious metals, 1-866-623-2002. The website, wwpmc.com. Get our free weekly newsletter. But when you have somebody like Mohamed El-Aaron come out, Harold, and say that we're on the eve of the next financial crisis, I look back to the old crisis that we had a few years back, and we had gold around $1,000. It pulled back to $700, and from there it went from $700 all the way to $1,900. So these pullbacks, they can be expected, but still, we're in a long-term bull market in precious metals.
Exactly. Again, if you're going to trade gold and silver, the chances are you're going to lose all of your money. 90% of the people that trade the market in and out lose their money. People that trade the futures market or the Forex market with high leverage all end up losing their money. And again, the shame would be is that you bought the market for the right reason. You bought gold and silver for the right reason, but people either get greedy or they get too speculative or they want to make a killing in the market and they get comfortable with it, and the next thing you know, they're out of the market. That's the worst thing in the world that you can do. This is a buy and hold. We're not trading futures. We're buying the physical metal. And we're sitting back for the long term because, again, as Randy said at the beginning of the show, the trend is your friend. And the trend has not changed. The other reason, by the way, that the metal sold off this week was also because of massive margin calls in the stock market. The stock markets all around the world plummeted. And it's not that you buy $1 worth of stock for $1 worth of money anymore. These hedge funds, they buy $40 worth of stock for $1 worth of money. So it's a 40-to-1 leverage. So when the stock market's going your way, that's a great thing because, again, they're heavily leveraged and you're making an awful lot of money. But when the market turns and goes against you, like it has on several occasions lately, that's when these fund managers have massive margin calls. When you have a margin call, what it basically means is that you get called up by the exchange that you're traded on and saying that you're in negative equity and you have less than 24 hours in which to bring your equity back up, or would they liquidate your entire position. So basically, when the stock markets around the world plummeted this week, there was massive margin calls, and they tend to sell anything that has any liquid value to it. Gold, silver, oil, commodities have risen so substantially over the last couple of years, and there's massive profits that those are the first ones that get hit. It's no reflection whatsoever on, all of a sudden gold and silver is not a good investment. Look, it's falling. No, in most cases, it's because these fund managers have to sell it quickly in order to raise enough money to meet their massive margin calls. So, again, there's a big difference between technical trading, which is short-term trading, and being a long-term owner of gold and silver. Those that are in the market with no leverage have no problem sleeping at night. You know, the market pulls back $3 or $4. We've seen it happen 9 or 10 times, no big deal. But the market has come back every single time because, again, we're in a bull market and the trend for metals is higher. When you listen to guys like John Embry is one of the smartest guys that you'll ever know. If you look at the people that are involved in GATA, the Gold Antitrust Association, these are Princeton and Yale graduates. These are brilliant, brilliant people that know what they're doing. So basically, when you've got the analysts that are coming into the market that have been, on our side for many, many years now and saying the same things, believe me, they get disgusted when the markets pull back $7 in 1 week. All of us do. But again, we understand that if you're trading it in the futures market, you shouldn't be unless you're an expert trader. If you're in the physical metal, pull back like this only become buying opportunities, just like with China. When gold pulls back like it did $200, they go in and they buy it like crazy because, again, they average down their positions. So, again, if we believe that we're going to have high inflation and continue to have world economic problems, you've got to be in gold, silver, and diamonds.
There's only one company Harold recommends that you deal with when it comes to investing in precious metals. They've been around for the entire time. This bull run in precious metals has been ongoing. Worldwide Precious Metals. WWPMC.com. Telephone number 1-866-623-2002. Ask them for our free weekly newsletter. They'll be happy to send it out to you free of charge. We'll come back and talk about diamonds. It was a great week for diamonds as the World Financial Report on radio with Harold Siegel and me, Randy Marshall, continues right after this. Welcome back to the World Financial Report on radio with Harold Siegel. My name is Randy Marshall. Joining us via the telephone, our financial expert, Harold Siegel. We're taping the show on September 23rd, 2011. At approximately 9:03 in the morning Mountain, 11:03 Eastern. Radio show runs on 630 CHED in Edmonton, AM 640 in Toronto. We have all the shows archived on Harold's website, HESradio.com, HESradio.com. If you ever miss a show, would like to hear it again, they're all on there. Go to HESradio.com to invest in precious metals. The telephone number, 1-866-623-2002. The website, WWPMC.com. If you'd like to receive our free weekly newsletter, Worldwide Precious Metals, the only company that Harold recommends you deal with when it comes to investing in precious metals, we'll be happy to send it out to you. It was a great week for diamonds. There was a rare blue diamond Bulgari ring, and it sold, and this is in U.S. dollars now, $2.9 million. After appearing at auction for the first time, boasting one of the rarest stones in the world, a unique blue diamond ring from Bulgari has fetched $2.9 million at auction, over double the original estimate. Seen in public for the first time, the eye-catching accessory commissioned in the mid-'60s was expected to fetch around half of what it originally was projected for, and they were actually saying in British pounds here, 800,000 British pounds. But widespread interest created a buying frenzy. And it was an amazing ring, and somebody obviously has it now and is very, very happy. But good news in the diamond world, when you saw stock markets plunging, diamonds selling for double what they were anticipated it going for in the auction over in the UK. RareColoredDiamonds.com, that is Harold's website, RareColoredDiamonds.com, the featured diamond of the week. It's a .55 carat emerald cut fancy intense pink argyle diamond. It's from the 2010 tender, and it's one of only 55 diamonds offered from that year, making it very rare. This diamond is an excellent investment for your portfolio and comes with all the argyle documentation. You will get that, and if you've waited for that perfect diamond to start your own portfolio collection of diamonds, this Argyle Pink is the one to get you started. Harold, it is stunning to say the least. And you were telling me off-air that you had an opportunity to speak with the people from Argyle, and it definitely looks like good things are coming in the years ahead when it comes to investing in pink diamonds.
Exactly. And again, I was so pleased to see that the auction results on that blue diamond came in as strong as it did, but it doesn't surprise me. Back in 2005, when the Cullinan mine in South Africa closed, that's where blue diamonds come from. The price of blue diamonds, vivid blue diamonds, high-quality diamonds were trading at $200,000 a carat. The mine closed in 2005. 3 years later, those same diamonds were selling for 700% more, $1.4 million, and now they're up to almost $2 million a carat. So you're talking that the blue diamond market has exploded, and that's primarily because there's very, very few blue diamonds on the market. You see, when you get into these very difficult economic times that we're in right now, there are very few assets that are safe, and diamonds are about the safest investment you can make. While you're seeing margin calls all over the world in stock markets and commodity markets everywhere, that doesn't happen in the diamond market. In actual fact, when things get as tough as they are, diamonds do better because people now are seeing the currencies, like we talked about at the beginning of the show. The Swiss franc is gone. The euro is going to be gone. Who knows what's going to be happening with the U.S. dollar? You need to own a diamond or something like a diamond that could be sold in another currency. Now, we don't just deal in diamonds. We deal in the amazing colored diamond market because it's very exclusive. It's a very, very small market. It takes 50,000 carats of white diamonds to find a colored diamond. The most expensive diamonds in the world are red diamonds. If you look at a 1 carat white diamond for about $2,500, a 1 carat red diamond is $2.5 million. That's the difference between white diamonds and colored diamonds. A 1 carat white diamond at $2,500 versus a blue diamond for $2 million. This is what we're talking about now. What happened with blue diamonds, when the Cullinan mine closed, the price of blue diamonds skyrocketed to 700 to 1,000% higher within 3 to 5 years. The same thing is now happening with pink diamonds. The Argyle mine in Australia produces 95% of the world's pink diamonds, and that mine is closing before 2018. Now, I'm a very big lover of Argyle pink diamonds. They're the most beautiful diamonds that you could ever lay your eyes on. The color is absolutely breathtaking. And there's different colors of pinks. There's faint, and there's very light, and there's fancy light, and we very seldom deal in any of those. We deal in the 4 best colors of pink, which is fancy pink, fancy intense pink, fancy deep pink, and fancy vivid pink. Vivid is the closest to red that you're going to get. And these diamonds are taking on a life of their own because now everybody in the diamond industry knows that the Argyle mine is closing down. Now, I've been recommending Argyle pink diamonds to my clients for the last 6 years. Once I found out that this mine was on its last legs and this mine produces 95% of the pink diamonds in the world, I know through experience, because I've been in this many, many years, that we are going to see a repeat of what happened with blue diamonds. And then I started recommending very, very heavily to my clients to buy these Argyle pinks and put them away. And now what's happening, these diamonds go up by about 25% a year. But now we're starting to see that the mine is starting to sputter, meaning that there's less and less and less diamonds coming out of the mine, and the fact is the quality of the diamonds that are coming out of the mine from here on forth are starting to drop substantially. When the GIA grades a colored diamond based on clarity in